According to supply managers in the 9 Mid-America states, how is the economy performing?
The economy, at least according to our survey of supply managers, manufacturing supply managers in the 9 Mid-America states, the overall index for the month of February was down below growth neutral, but it was only slightly below growth neutral at 49.1, and that's down from January's number, which was only slightly above growth neutral at 50.9. So it was not a good survey. We're still seeing the manufacturing economy just moving sort of sideways to down, a little bit up each month. About 14.3% of the manufacturing supply managers expect the economy to expand in the next 6 months. So that's not good. About 15% said they expect the economy to expand in the next 6 months. The greatest threat, we asked about the greatest threat, and not surprisingly, I guess, about 60% said it was higher input prices. Now that is somewhat surprising because we're talking about goods, but that's probably on the service side more than the goods side. So 60% saw higher input prices as the biggest threat. 15%, and this is down significantly, see shortage of workers being the top threat going forward, and then 14% indicated rising regulations going forward was the biggest threat. 5% indicated tariffs and trade wars, very small, and the remaining were other factors, that's 6%. So all in all, again, it was significantly higher. The big threat was in terms of higher input prices or inflationary pressures at the wholesale level. Now here I'll bring up the chart showing Creighton's survey of supply managers, and as you can see, it's moving along much like the national number. The national number will come out later on this morning for the month of February. That number is, their number was 49.1, identical to our number. Now again, that number was January for the U.S. ISM. It's called the PMI, Purchasing Management Index. So we're moving in about lockstep with the national economy, national manufacturing economy.
What were the hiring trends?
Hiring was not good for the month, although the number was up to 42.9, which is obviously below growth neutral. Growth neutral is 50.0 on all the indices that we track. That's up from 39.1 for January, so it was up, but still very weak. Approximately 24% of the supply managers reported job losses for the month. We asked this month, what about working from home? And what's the percentage of your workers in your company working from home? They indicated 14% were working from home. So that was lower than I would have expected. I would have expected somewhat higher, but again, 14% of the employees working from home. And we looked at layoffs and hiring, separations, I should say, layoff separations, but also job openings. And layoffs were up in Arkansas, Minnesota, Nebraska, and Oklahoma. They were about the same. Now I'm talking about year-over-year change in layoffs. They were the same in Iowa, Kansas, and North Dakota. And they were down. Layoffs were down in only one state, that's Missouri, and that's, again, over the 12-month time span.
What inflation trends are you noticing?
Inflation number was reasonably good, I would call it. It was 61.9, and that's from January's 71.7. Now what we're seeing in our survey and national surveys is in the goods side, product side, we're seeing inflationary pressures are moving lower. It's on the service side where we're really seeing some issues. So it depends on what we're talking about buying. But overall, again, on the goods side, we're moving into a pretty solid range or a good range. The CPI, when we look at the CPI coming from the U.S. Bureau of Labor Statistics, over the last 3 months, 0.7%. Of course, multiply that by 4, and you're at a pretty good range there. It's about still above the Fed's target. But then when you look at the core, that excludes food and energy. That's 1%. Of course, you multiply that by 4, and you're at 4%. That's double what the Fed's target is. When you look at the PPI, Producer Price Index, Wholesale Price Index, up by 0.3% for the 3-month period. Services, though, up by 0.7%. As I said earlier, that's where the real issue is in terms of inflationary pressures. But we are seeing disinflation, but not deflation. We're not seeing prices coming down. But again, the inflation rate still remains above the Fed's target, and that's we're going to see that coming from the Federal Reserve in the weeks and months ahead.
What is the economic outlook?
The outlook is, in my judgment, is real estate. Still some issues with commercial properties, residential. We're going to see some softening of the growth rate in residential, and even some negative numbers, meaning prices coming down for residential. Commercial real estate, some real problems is those, particularly in downtown spaces, a lot of rental properties, office space particularly, much weaker. As a result, I expect no rate change from the Federal Reserve. In other words, the Federal Reserve's, much like our survey, is looking at this economy and trying to gauge where it is right now. And so I expect no rate change between now and the July meeting. So that's 20th of this month. There will be no change in the rates at that meeting. Keep an eye on the Federal Reserve's balance sheet, though. That's where you're going to see some action, where they're going through quantitative tightening now, which means they are actually selling bonds or allowing them to mature, which means putting upward pressure on long-term interest rates. But keep an eye on that. That's where the action is right now. The CPI over the month of February, which will come out in March, mid-March, that I expect to be 0.3 percentage point, still above the Fed's their target, still I won't say well above, but above the Fed's target. Long-term interest rates, again, more affected by the Fed's action on the balance sheet, is likely to move higher, a bit higher, but sideways, more sideways, and a little bit up. We're not going to see mortgage rates move up or any significantly this first half of 2024. The prime interest rate will remain at 8.5% until August. I expect that August the 1st. In fact, I do expect a cut to 8.25 at that on August the 1st. Keep an eye on the bond market. That's where the real action is. Stock market, fabulous 5. We saw the 7, the fabulous 7, fantastic 7, now down to 5. Google's is having some issues. The yield on the 10-year Treasury, keep an eye on that. Again, in the range of 3.7 to 4.5, and that's going to be not making a statement there. If it moves above 4.7, that's problematic, meaning too much inflationary pressures. You'll see mortgage rates moving up. I don't expect it to move above 4.7, but right now it's about 4.3%. That's moderate. That's what we expect. Keep an eye, again, as I said, on the Federal Reserve's balance sheet. And also the national ISM number, which comes out, the PMI comes out later on this morning. It's identical. We use the same methodology as ISM does. I expect that number to probably be about like ours, a bit below growth neutral. Manufacturing has not been doing well for the last year. It's, in fact, when the numbers are the dust finally settles on this, we'll probably look back and say the manufacturing economy was in a recession for much of 2023, and now 2024 is looking somewhat better. Price of a barrel of oil, it's moving up above, getting close to $80 a barrel. It gets above 80, you'll see some action there, some action in terms of bond markets and moving upward in terms of overall prices, the inflation numbers. Listen carefully to what the members of the FOMC, that's the committee that sets interest rate policy in the U.S., and listen to what those guys and gals say. And that's it for the month of February here. Ernie Goss here on the first business day of March. The numbers, again, were not that good. Here I am at Creighton University in beautiful downtown Omaha, Nebraska, and wishing you and yours a great March, and then may your economic cup runneth over. Thank you.